Hey, welcome to Patterns and Profits. I'm Tom Gentile, resident pattern trader. If you've ever felt trapped by the emotional roller coaster of news, opinions, and meme-driven hype, well, you're not alone. Here, we focus on patterns, not panic, on profits, not predictions, and based on a proven, repeatable approach that cuts through the noise and helps you trade with confidence. If you want my videos, education, and special reports the moment they're hot off the press, well, then sign up for my newsletter. It's absolutely free. Welcome aboard, and let's get started. Hey, everybody, Tom Gentile here. Welcome. Today, it's Monday, August 3rd, right straight up 12 o'clock. Glad to have you hanging out with me for Patterns and Profits. Yes, I'm back. I was gone a little bit, but I'm back. For some of you that thought I did an early retirement, no, I didn't do an early retirement. Took a little camping trip, did some traveling, and unfortunately, I was traveling at the very time when I was live streaming, when I typically live stream. But anyway, guys, I'm back. I'm here. I'm here to help you discover patterns that repeat. I'm here to help you discover profits that add up. Obviously, if you're new to us, you can help us out, like and subscribe to the channel. Hit the notification bell and also select all if you want all my videos when they're uploaded. And one more thing that I got to mention, that I mention here quite often, is that past performance is not indicative of future results. So let's get started. I've got a couple things up here that I want to start off with. It's the first trading day of August. I want to do a market update for you coming into this first week of August. That is the 3rd through the 7th. It is back to school time. That means that, think about this. There's only one other shopping area that is bigger than back to school. Okay. I think you all know what it is, but back to school is the number 2 biggest shopping binge of the year. And there are some stocks that I want to look at. We're going to look at several stocks, and I'm going to give you my final grade on my top 3 back-to-school stocks. However, before we get rolling into August and we get into back-to-school stocks, I want to tell you what I did for you in the last 2 weeks, that you may have missed me. In case you didn't miss me, I missed you too. But what I did was I put together something for you as I was camping called Cash Camp. I want to do a quick little follow-up on Cash Camp, because if you missed this, it's okay. I got you covered. But let's do a quick recap of what I covered in the last 2 weeks. So I put together a series of things for those of you that really want to take a little bit more of a dive into how it is that I trade using seasonality. I called it Cash Camp. Every day for the last 2 weeks, I've been sending you stuff. So you should have checked your email, because I've been sending you things like, first I sent Stock Cycle Trader to you. This is a weekly thing that we put out. It's our debrief. And that debrief will tell you everything from what's going on in the markets to the overall stocks, what the overall picture looks like seasonally. And I do a bit of that as well right here on the live session. But you have this at your fingertips with start and end dates on the overall markets. So I did that, but I also followed up with videos, right? Videos like why great traders ignore 99% of the markets. All right, that's something that we did. I also did a video on becoming a pattern trader, really how I became a pattern trader and how you can become a pattern trader, how patterns beat predictions, right? This was all in week 1. Week 2, I sent you another Stock Cycle Trader debrief. And I also sent you videos on how I find the very best trades, why I trade options, cutting your risk without sacrificing profits, and placing trades. All right. So I did all of this. And if any of you missed it, check your inbox, because it's all been sent to you, even in recaps. But maybe the biggest thing you might have missed is the invite I sent you to become a Money Counter Pro Plus member. Now, Pro Plus members receive access to my money counter software scans, all right, weekly hand-picked trades, video updates, real-time trade alerts, and much, much more. And right now, you can get this at a special cash camp price, all right? So click on the QR code that's above me, or you could click on the link in the description, okay? So check out the description. In fact, I'll even put it right in the comment section for everybody so you can see that as well. And let me place that real quick here before we get cracking on into the markets. So here you go. This is for those of you that are on a laptop or that cannot take a picture of that QR code. So I want to make sure that you have access to that, that as well, okay? That is called our, again, Money Counter Pro Plus. It is software, it is alerts, it is much, much more. It is available at a really nice beginning price for you. So you can really take a look at this, get under the hood, and see if it's for you. All right. So that being said, it is Money Calendar Monday. So let's talk about what's happening this week. You know, biggest market concerns when I think about heading into the second half of 2026, they really come around 3 pressure points: AI volatility, inflation, and Fed policy. All right. I mean, you take a look at first AI, the massive infrastructure spending. I think investors are really worried about overcapacity right now. And also the commoditization of AI hardware. Also hyperscalers, that's the Mag 7. They need to prove that this investment is worth it because their leadership is going to become vulnerable if not. I mean, you got JP Morgan, Schwab have commentary that they're concerned energy-driven inflation is going to reaccelerate again. You got rate volatility. It could affect everything from equity multiples to credit concerns, capital flows. You know, you got Reuters that sees the S&P 500 earnings are going to rise 26% this year, but we're on watch because the delivery is the big risk. If mega cap misses, then we could see market weakness. So let's take a look at the markets. I have them on the screen here. I'm going to blow the screen up here for everybody to see. And this is a chart of the Dow. I want to look at the Dow, S&P, and NASDAQ to start our morning off. Dow's gone up really. If you look at it, it is the strongest right now of the 3. We've seen it go from earlier in the year around 450 to about 530. It's pulled back a little bit, but not that much. And then if you look at what's going on with today's price action behind me here, you can see that we are back up to and very close to those all-time highs. The other thing that's happening is we've seen a complete reversal just since last week, where at the money implied volatility, this is what option traders look at to help them get a gauge on what the overall market is doing. Range bound is hitting lows for the year, right? This is actually good for the stock market, but when you get too low, when we limbo too low, that becomes a problem. And there's some cracks beginning to appear, right? And I'll show you those in just a moment. But that's DIA. Take a look at SPY, and you can see the S&P made its yearly highs back in June, and it's been bobbing back and forth, and it's really made almost what looks to be a triple top, right? And we seem to be around the 760 area. Looks like the 760 area for the S&P. And again, if you take a look at today, we're very close to all-time highs once again. But the reason I say the Dow is stronger is because it's just coming off its highs. It's not attempted again and again and again to crush those all-time highs. Finally, look at the Qs. So this was the AI and tech-driven move that happened from April up until June. Biggest of the 3, but also we've had the biggest pullback as we've seen the Qs go from just below 750 down to just above 650 before reversing course. So I believe AI and tech are going to lag the next move higher, and we'll see new all-time highs in the Dow and the S&P before we see them in the QQQ. Now, looking out past these 3, what does seasonality look like? Well, it's still bullish, all right? It's a little bit more bearish for the popular stocks, but when you look at the overall markets, it's still bullish. We start the week out 56-44 in favor of the bulls. We end the week 77-23 in favor of the bulls. But I want you to look at the most powerful trends that are starting to come up as we hit the first week of August. The most powerful trends that I see right now are in FXY and in UUP. Okay. Now, first, what is FXY? This is the ETF that looks at the Japanese yen and the US dollar. This, I know it's green, but it's bearish. Okay, it's bearish. The green that you see on the screen is every time FXY went down. If you shorted it, you see that it has dropped in value anywhere from, very, very little in 2020. It had very little movement in 2020, had the biggest move in 2022. And remember 2022? Remember what happened? We had the beginnings of the move down, the bear market. Well, the Japanese yen moved lower against the US dollar by over 11%. Last year it was 3.9%. But in 10 of the last 10 years, we have seen the Japanese yen start to pull back a little bit. Now, here's the second one I want to show you. The double dollar index. This is UUP. This one you're probably a little more familiar with if you look at currencies. UUP is the double dollar index. It measures the US dollar to about a half a dozen other currencies around the world. And it also does this via what's called the USDX futures. Here's the thing you want to know about the US dollar. When it goes higher, right, it's going higher against what? Foreign currencies that also could hit assets and even the stock market. And you can see here for the next 2 months, heading in August and September, we typically see the US dollar, at least the last decade, we've seen it tend to move higher from as little as 0.25% in 2019 to as high as almost 7.5% in 2022. But you can see every year this moves a little bit higher. Now, the double dollar index moves at twice the rate of the speed of the actual US dollar. But if we have an average move here, and let's call that average move on UUP of 3%, that means that the US dollar will move up about 1.5%, right? It doesn't sound like much, folks, but let me tell you something. The US dollar, the UUP, is already up, I want to say 10% for the year. That means that cash has already increased 5% on this year. And, what is it affecting? It's definitely affected gold, definitely affected Bitcoin. And I believe it's eventually going to knock on the doors of the stock market. So August tends to break seasonality in favor of the bears, okay? This is going to put pressure on assets like gold. It's going to put pressure on assets like Bitcoin, right? And ultimately, I believe it could put pressure on the stock market, okay? And FXY and UUP, those patterns confirm this. So if August is the beginning of a potential cracky month, showing cracks in the bullish move, are there outliers that could continue to move up? Stick with me as we go back to school. Hey traders, Tom here. And if you've been keeping score, I just completed my 2-week cash camp, which you all had access to. So let's do a quick recap. In week number 1, I covered the foundation of rules-based pattern trading, from finding the right stocks to understanding why successful traders rely on evidence instead of opinions. Now, this included my stock cycle trader debrief, as well as videos like why I ignore 99% of the markets, how to become a pattern trader, and how patterns beat predictions. In week 2, I sent you another weekly stock debrief and videos including finding the best trades, why I trade options, cutting your risk without upside, and finally, how to place those orders. Now, if you missed any of this, check your inbox because it's all been sent to you in recaps. But the biggest thing you may have missed is the invite that I sent you to become a Money Calendar Pro Plus member. Pro Plus members get access to my daily Money Calendar software scans, as well as weekly hand-picked trades, weekly video updates, real-time trade alerts, and much, much more. And today, you can get it at a special cash camp price, all right? Just click on the QR code on the screen or the link in the description below for all the details. Again, I want to thank you for joining me over the last few weeks in Cash Camp, and I look forward to working with you in the future. All right. Well, thanks for joining me, guys. We are back. And speaking of back, it is back to school time. All right. Back to school time. I know a lot of parents who are very happy that it's now beginning to see back to school so they can get back into that routine of dropping the kids off or letting them pick up the bus. And they get that little break during the day as kids go to school and learn. But you know what? I want to talk about something that happens before the bus stop. I want to talk about something that happens before you send your kids off to college or prep school or wherever it is they're going, because that is where I think we see a lot of the outliers that are happening. So, I want to talk about the calendar first. So as we go into the back to school season, when you look at the August calendar, when you look at the calendar for August, and this is across 350 or so stocks that I look at, I find that it is a bearish August. So where are the bulls, right? The bulls are always going to be bulls in seasonality. They're just not always what you and I may think they'd be. So back to school season starting right now. I want to talk about the shopping window. I want to talk about back to school company sectors. My top 3 picks for back to school, the ones that make the grade, and of course, some buying and selling tips on those as well. So the big picture is this. First of all, back to school is the second largest consumer spending cycle in the year, only second to the holiday shopping season, which we all know begins earlier and earlier in the year. In fact, I was in a Lowe's Home Improvement last week, and they had the Halloween stuff up already. This was July, and I'm already seeing Halloween coming up. So the bricks and mortar companies are still trying to beat themselves, trying to beat others to the picture. But enough about that. We'll get into the holiday season soon. But right now, this is the season to be talking about right now. $140 billion annually. And when you break it down, there's about $30 billion to go into electronics and tech. The apparel and footwear section is $35 billion. Dorm furnishings, about $14 billion. And this is something that's called inelastic demand. What that means is that, parents are not looking at this as a luxury ticket or an impulse buy. They see this as what's called a non-negotiable expense. They're buying things for their kids, right? They're buying furnishings for the dorms. And if they have to buy a more discounted piece of furniture, they will. It's not like, do you need this desk or don't you need this desk? You're getting the desk. It might be a better desk or maybe something that's a little bit less as you go forward. Now, the second thing we want to talk about is the timing window. The timing window of when this all starts when it comes to the stock market. So, 80% of families, most people might think, well, Tom, shouldn't we be, they've already started this, the advertising. Shouldn't we be already purchasing these things? You might think, but 80% of families are less than halfway done with their lists heading into July, late July, early August. And parents and students themselves, they consider going to the actual physical location to fit clothes, to test electronics, to make sure they get the right thing the first time. And then, of course, you got the earnings catalyst, and that is that we've got Q2 earnings that are reporting, and for retail companies, they report in August. So we've got that run up that's happening as well. All right. So let me talk for a moment about the stock or the companies I want to call them that I believe are ones that you and I are already thinking about. So they come in, they're in 3 different areas. And number one is the discounters, the big box stores. And that's Walmart, which consistently dominates that K through 12 market because they've got price leadership. They're also proximity to anywhere. Families that look to stretch budgets, Walmart's going to benefit them because they're basically a one-stop shopping area. Now let's talk about the competitor, Target. Target's primarily a back-to-college surge. They really put a lot of their advertising dollars in the dorm organization, furniture, bedding, trendy college apparel, and really that high-margin impulse buy, which they set right alongside standard school supplies. And then there's one more area that I think about when I think about the bigger supply chain or the bigger chain stores, and that's Five Below. Okay, so what is Five Below for those of you that don't know? This is really a deeply discounted store. They're tuned into more like the Gen Zs and the preteens, and they have really low price points. They mix a lot of their store up. They've got trendy stationery. They've got locker decorations. They've got backpacks, if you can even wear those in school anymore. And they've got a lot of tech accessories at lower price points. And they're really more of a high unit velocity type of store. And they drive that velocity in August. Now, speaking of Five Below, I'm going to talk to the Gen Zers for a moment. I know there's a few of you that watch me, and I mean few. So I'm going to give you a trigger warning. That triggers a word that is, it's infiltrated in the Gen Z community. So I got to give you a trigger warning, all right? You're going to want to vape when you go out and vape when you hear this, Gen Zs. Five Below did not make my final list. I mean, I know you're on fire, you're lit, you're whatever Gen Z words you're using, but you're going to see why it didn't make my list in a moment. So the second area I want to talk about is apparel and footwear. And I'm talking about TJX and Ross to start off. So, these are off-price retailers. They benefit immensely from parents who are going in looking for brand name and even off-brand name at discounted prices. And in fact, if you've ever been into a Ross store, I've been into a Ross store, make sure you wear boots because you're going to need boots to step over all the clothes that end up on the floor, especially if you go in the afternoon or the evening hours. Now, all kidding aside, and that's not a joke, all right? That's a fact, okay? Dare I call that a public service announcement? But guys, apparel accounts for over 35% of back-to-school spending, right? What people wear. And that off-price inventory, that's significant, especially when you go through a year where we've seen gas prices. We've seen the price of things. And to me, gas is a tax on everybody. And it's a tax on everything because most of the stuff that we buy gets transported from A to B. Well, if gas prices are higher, that's going to be embedded into the price. So when you look at a TJ Maxx, you look at a Ross store, that's where people are going first to find things at the lower price points. Also, Abercrombie and Fitch, and Nike are two other ones that I'm looking at. Massive. First of all, A&F had a massive turnaround. They've had a massive turnaround that you can see it in the stock price. They are now capturing that high school and college brand loyalty once again. Nike, they're just a dominant footwear destination. They've always been. And they're always big with back-to-school footwear. Last but not least, consumer electronics. And I'm talking about Apple. They do that back-to-college hardware promotion. They give gift cards, discounts on MacBooks, iPads. And they do that annual September iPhone launch event. And now you know why they do it in September, because they're looking for that sweet spot for back to school. And then there's Best Buy, which Best Buy, I like to say they hop on the Apple train because they do represent Apple, but they also have other laptops, tablets, headphones, for the Android folks, dorm appliances. That's a big high dollar spend category. It's usually about $300 per student. So Best Buy gets demand acceleration from about now into the end of August. But the big question that should be on your mind right now is, Who makes the grade? Who makes the grade when it comes to seasonality? Who makes the grade when it comes to looking at all the data to determine what stocks actually have gone up year after year after year? I'm going to show you that right now. So when you look at these back to school stocks, and I've talked about all of them here, let me bring them up on the screen to show you. You know, we talked about Walmart, we talked about Ross Stores, TJX, Apple, Target, Five Below, Best Buy. All right. Now there's a reason I have these ranked the way they're ranked, because those three at the top, they make the grade. Walmart makes the grade, Ross Stores makes the grade, TJX makes the grade. I'm going to give you a full lineup on these here in just a moment. But here's what I'm talking about. I use something called the money calendar, for those of you that don't know. And the money calendar allows me to go in and find stocks that over the last 10 years have had at least nine of those last 10 years as winners. Now, when I look at the overall calendar, green days are bullish, red days are bearish. I look inside each day for opportunities. Now, when I started with this, I just started with a few stocks. Then I expanded to the top 325 stocks. But I'm looking for 10 years worth of data. I want to see stocks that produce better patterns every year. And what I ended up with was a ton of data. And what I'm looking at are things that look like this. Here's Walmart. So Walmart was at the top of that list because for Walmart, 9 of the last 10 years, this stock has moved higher. Starting today, Monday, August 3rd, we've seen it move 9 of the last 10 years. In fact, 9 of the last 9 years has moved higher from now through mid-September. So, you know, I am able to find this by sorting through and scraping through tons of data, and I can scrape through the columns and I can look at things like total number of trades. How long am I holding the trade? What's the percentage return? What's the accuracy? When's the last time I had a loser? Right? And then also something I use called Power Meter. And Power Meter just allows me to go through those 10 years of data and find those stocks where the patterns are getting better and better and better as we get closer to this year and this year's patterns. Ross Stores was also on that list. Ross Stores I have as the second. It also has a 9 out of 10-year history. Had a loser about 5 years ago. But from August to mid-September, it too has risen higher, moving forward from August 7th into mid-September. Now, if you look at the chart of Ross, you'll see Ross Stores. I brought this chart up for a reason. Look at what it is doing. This stock has gone up by, oh gosh, I won't say it's doubled, but it's gone up a good 80% since about this time last year. So Ross Stores is doing extremely well. Will the calendar push it even further? Perhaps. But again, in order to be on my calendar, it's got to be one of those top 325 stocks or ETFs. Got to have 10 years of data. Got to have at least a 90% historical accuracy looking back 10 years, which brings me to my third of these stocks, and that is TJ Maxx. Starting August 10th, TJ Maxx has a 10-year bullish seasonal pattern. It did not make money in 2016. But in 2017, 18, 19, 2020, 21, 22, 23, 24, and last year, all winners if you were bullish between August 10th and moving forward into the latter stages of September. TJX has actually been a moving target. It is bullish right now. It has been bullish a week ago. It is one of my favorite back-to-school stocks, probably is the favorite of the three when it comes to our back to school patterns, right? And if you take a look at TJX on the chart here on the graph, you'll see that TJX, interestingly enough, is in the middle of its range right now, all right? So it's basically flat for the year, but we've seen it higher, we've seen it lower, and if it goes into the seasonality that we saw last year, we could be pressing up against those yearly highs. Now, the big thing that all three of these top three stocks have in common is they all have earnings that are coming out, some sooner than others. So that might be the real area that we have to pay attention to, right? But one thing we can do to control our risk is look at things like options. I trade options for control. I trade options for predetermined risk, which is much less than the stock itself, and a potential return on investment, higher potential return on investment when you compare the ROI of an option trade to the ROI of a stock trade. All right. So a comparison might be this. Here's a trade that we did earlier in the year on Tapestry, where the stock would cost $6,500 to own 100 shares of stock. The calls were only $500, right? All the way at the end, you're talking about 20% ROI on the stock because it moved higher. But with the option trade, it became a 200% ROI because you had a lower risk, a lower cost. But when Tapestry moved, the options had a higher return on investment than did the stock. So our back to school stocks, one more time. You got Walmart, which is starting right now. I've got Ross Stores, which really starts its pattern on August 7th, and TJ Maxx, or TJX Stores, which starts on August 10th. All right. So there you go, folks. That is my stream for you for the week. Again, you can find out more, for those of you new, on what I do by following me on patternsandprofits.com. Until then, I'll see you again here, same time next week. Thanks, everybody. Hey traders, Tom here, and if you've been keeping score, I just completed my 2-week cash camp, which you all had access to. So let's do a quick recap. In week number 1, I covered the foundation of rules-based pattern trading, from finding the right stocks to understanding why successful traders rely on evidence instead of opinions. Now, this included my stock cycle trader debrief, as well as videos like why I ignore 99% of the markets, how to become a pattern trader, and how patterns beat predictions. In week 2, I sent you another weekly stock debrief and videos including finding the best trades, why I trade options, cutting your risk without upside, and finally, how to place those orders. Now, if you missed any of this, check your inbox because it's all been sent to you in recaps. But the biggest thing you may have missed is the invite that I sent you to become a Money Counter Pro Plus member. Pro Plus members get access to my daily Money Counter software scans, as well as weekly hand-picked trades, weekly video updates, real-time trade alerts, and much, much more. And today, you can get it at a special cash camp price, right? Just click on the QR code on the screen or the link in the description below for all the details. Again, I want to thank you for joining me over the last few weeks in Cash Camp, and I look forward to working with you in the future.